All right, this is AMD, also known as Advanced Micro Devices. Their ticker symbol is AMD. They're currently trading around $554 with a market cap nearly 904 billion, and their price to earning to ratio is about 177. Uh, that last number really tells you the whole story before we even get started. So as of right now, the market is paying a fortune for one idea. That AMD is the second name in AI silicon. And the second name finally matters. Alright, so the latest news with AMD. So there's four things you need to know. So first, OpenAI committed roughly 6 gigawatts of AMD compute over several years, and the deal lets OpenAI earn warrants for up to 160 million shares, close to 10% of the company. That turns a customer into a partner essentially. Second, Oracle is deploying 50,000 MI 450 GPUs starting in the third quarter. The first big public cloud build on AMD instead of Nvidia. Third, the MI 400 series ships this half on TSMC. There are 2 nanometers with 432 gigabytes of memory. And fourth and lastly, first quarter revenue hits 10.3 billion, and they're up 38%, with data center up 57%. All right, so for the executive summary for AMD, so here's the whole story in 30 seconds. AMD is the number two designer of the chips powering the AI boom, and for the first time, it has both the products and the customers to make second place pay. What it is a fabless chip designer spanning data centers, PC, gaming, CPU, and embedded, now led by EPYC server processor and Instinct's AI accelerators. What really changed is the OpenAI and Oracle commitments, plus the MI 400 launch, finally gave a good deal, a real deal to them, and multi-year AI revenue and visibility. The financials revenue grew 34% to 34.6 billion with record cash flow and the debate at 177 times earning through price earning ratio. The business is executing, but the valuation already assumes years of it. The multiple, not the model, is the real question. All right, so for the business model, so AMD runs four segments. Data center is the main engine at 16.6 billion, and the EPYC server chips plus Instinct's AI GPUs. Now nearly half of the company. Client is about 10.6 billion of Ryzen chips, quietly taking shares from Intel. Gaming is essentially 3.9 billion, almost 4, from Radeon, and console silicon. Their embedded is 3.5 billion of steady, higher margin industrial part. The mode is an x86 license. Intel cannot revoke a lead in chiplet design, and the only full stack CPU plus GPU answers to Nvidia as of right now. All right, so the numbers. So the last 3 years actually, the growth is real. Revenue went from 22.7 billion in 2023 to 25.8 billion in 2024 and up to 34.6 billion in 2025. All right, so the net income more than doubled to 4.3 billion. Non-GAAP earning hit a record of 4.17 per share, and the gross margin climbed to 52% as the mix shift towards the data center. Then the first quarter of 2026 came in at 10.3 billion, up 38%. This is a company accelerating and not really coasting. All right, so how does cash flow works for them? So cash tells the same story. Free cash flow set a record at around 2.57 billion in the second quarter because a chip designer converts profit into cash efficiency, and AMD is fabless. So TSMC, plays a big role in it. They own the expensive plants, and AMD spends on design and intellectual property. But here's the real tension about it. So scaling the MI400 means locking up scarce HBM4 memory and a 2 nanometer capacity in advance with TSMC. The cash has to go out well before the revenue comes in. As for the capital allocation, do not buy AMD just for the income alone. There's actually no dividend for AMD at all, and there will likely never be one anytime soon, based on what I predict, I suppose. The buybacks are quite modest, 1.3 billion last year, with 9.4 billion still authorized, and they likely mostly offset stocks based on pay rather than shrinking the share count. And every spare dollar goes into securing capacity for memory supply and small deals that build out software stacks, rack level systems like Helios. And this is a reinvestment, not really a return. All right, so for the macro and geopolitics side, so the tailwinds are quite strong. AI spending keeps climbing. Buyers genuinely want a second source, and Intel keeps stumbling. The headwinds are just as real. China exports rules cap the market and force a lower spec parts. Demand is concentrated in a handful of customers. So, and everything leans on TSMC and a thin memory supply chain. The single biggest swing factor is actually Washington, and no doubt about that, because every change to China's chip rules moves AMD addressable market, overnight. So for the competitive position, so here's a number that really matters. So Nvidia holds around 80% of the AI GPU market as right now. AMD sits at only, 6. The gap is the entire opportunity. AMD currently wage is a memory, and the MI400 carries 432 gigabytes versus NVIDIA 288. So bigger model fits without splitting them up. But for NVIDIA, the real moat is that not the chip, but more of the software part, which we talk about in the other video, is CUDA. The software, that every developer already built on, the AMD ROCm is closing that gap so right now, but the switching cost is still relatively high and a lot of effort. So most likely, if somebody already built something, it's kind of hard to migrate one from another unless it really makes a huge financial sense in the long run, depending on like the org or and such. All right, so for the risk side, so there's actually 4 risks that I rank. So the valuation, again, 177 times price to earning ratio of a perfect execution. Nvidia and CUDA is high. A bigger, richer, and rival owns the software layer. China export policy is medium. Rules can raise demand with no warnings, and the supply concentration is medium. Lean too hard on TSMC and a thin memory chain and a shortage of caps the whole ramp. And none of these are actually hidden. All of them are all live. All right, so for the bull, neutral, and bear cases, so what has to be true? So for the bull case, MI400 ships on time, the big customer scales, more cloud follow the cloud providers, and the earning, grow into the multiple. For the neutral case, AMD keeps on a winning share, but the premium slowly normalized compared to what it was showing last year, and the stock tracks earnings. For the bear case, MI400 slips and China tightens. AI spending cools down and then 177 multiple contracts back towards the market. Same company, 3 very different outcomes. All right, so for AMD, it's a call option on being the second. In the market desperate for an alternative to Nvidia, it does not have to win in this case. It just has to be a credible number two, and right now it is the only one. What is worth 177 times earning is the question we have to answer to. So yeah, that's really pretty much it what I have for AMD, which I did a little bit of research about it. But yeah, that's really what I have. All right, thanks. Bye.